Hello from Group 7. My name is Sirisha, and today we are here to present Porto 5 Force analysis of Royal Bank of Canada, also known as RBC. Let me quickly show you what are these 5 forces are. Okay. We have bargaining power of buyers, bargaining power of suppliers, threat of substitutes, rivalry of competitors, and threat of new entrants. Let me give you a quick introduction about RBC. It is one of the Canada's biggest banks, and it plays a significant global role with large asset value. It has 97,000 employees, serving over 17 million customers in 29 countries, including Canada and the United States. RBC's vision is to among the world's most trusted and successful financial institutions, and their values include clients first, collaboration, accountability, diversity and inclusion, and integrity. They do offer a wide range of services that include personal and commercial banking, wealth management, insurance, investor services, and capital market solutions, which will help them reach clients worldwide. Let us now look at the first force, which is bargaining power of buyers. First point is many choices and high expectations for service quality. That means buyers do have many choices available in the market. For example, I am a customer of RBC, and if I find RBC's competitors like Bank of Montreal, Scotia Bank, or Toronto Dominion offering nice services at lower prices, then I might want to switch from RBC to them, and which will give the power in the hands of buyers. That's basically bargaining power of buyers. Technology and innovation are crucial for RBC because nowadays everybody wants to do things online, be it creating account online or doing online transactions, are considered hassle free rather than going to the nearest branch and waiting someone to help you is time consuming. Next up, importance of brand's reputation. Customers care a lot about how they see RBC and what they think about its reputation. If they see RCB as reliable, stable, and doing the right thing, it can enhance its bargaining power, while negative publicity or controversies may weaken its bargaining powers too. Lastly, we have transparency and fair treatment. Customers do demand this because it will greatly influence their satisfaction and loyalty towards RCB. Next up, we have bargaining power of suppliers, which will be explained by our groupmate Bhupesh. Thank you.
Thank you, Sirisha. Hello, I'm Bhupesh, and I'm here to talk about the bargaining power of suppliers, the RCB as. So, when talking about the bargaining power of suppliers, it can be boiled down to five major factors, starting off with supplier diversity. So, RCB is a relatively big firm, which most probably has a wide variety of needs from tech services, fintech services to supplies, which kind of gives it the ability to provide opportunities to a diverse range of suppliers depending on the need. And this diversity will help them by not allowing the suppliers to take any advantage in bargaining with RBC. RBC also clearly states its value towards the diversity and inclusion towards the suppliers. And then moving on, we have supplier reliance. So, while talking about this, the diverse number of suppliers that we discussed earlier actually helps in not relying too much on any single individual supplier, because when depending on a single supplier, it kind of gives them the power to take advantage and bargain a lot with our RBC. So as it's said, do not put all your eggs in one basket, right? So the more it relies on a single supplier, the more the supplier will be able to bargain. And third, we have switching costs. So switching costs basically means uh, when RBC wants to switch from one supplier to another supplier, it might put a huge burden of cost depending on what impact it's going to have on its operations. So this can actually hinder their business services, which might again cause a huge loss, which causes trouble. But RBC would most definitely have some clauses included in their agreement, which might be able to avoid any of these abrupt changes or have backups for any such possible scenarios. And these kind of situations again gives the suppliers the ability to bargain with us RPC. And then we have suppliers availability when there's immediate purchases to be made. So this is pretty much self-explanatory. Whenever there's an immediate purchase to be made in regarding with the suppliers, the time crunch actually limits the number of suppliers they have to choose from, which will again provide the suppliers the ability to bargain more. And also in case of immediate purchases, it's again important to consider any switching costs if applicable. And then we have a supplier forward integration. So this is related to suppliers changing their domain and switching into the same as RBC, which is banking. This is mostly not tend to happen because the suppliers are already specialized in their own services, and then quitting their services entirely and entering a different service doesn't really make a whole lot of sense unless they're trying to expanding into these as well. But RBC also clearly defines the conflict of interest in the supplier's code of conduct, which I think will refrain them from switching their domains and becoming one of their competitors. And I also believe proper due diligence beforehand might help in preventing this. So that's pretty much it from me. Numan is going to take it forward.
Thank you so much, Bhupesh. So my name is Numan. I'll be talking about the threats of substitutes to RBC. A substitute basically is a product which can meet the same requirement in the industries. So the customers can choose between RBC or any other substitute that they have in the market. So we basically have seven types of substitutes here. There are other traditional banks, credit unions, online banks, fintech companies, international banks, digital cross-border financial services providers, non-banking financial institutions, and Motors Bank. I'll explain them in more detail in the next slide. Can you please change the slide? Yeah. So other banks like TD, BMO, BNS, CIBC, they are the national banks. They offer similar services with extensive networks and competitive digital solutions. Online banks like EQ Bank, they offer low interest because they don't have to be physically present. Therefore, they can offer low interest loans, and they can even provide low charges for the different services that they provide. Second, fintech companies like P2P lending, robo-advisors, and e-wallets are some of the examples of fintech companies. They disrupt traditional banking because with peer-to-peer lending, they are bringing innovation into the market through alternative and banking products. Then the insurance companies and investment firms such as Manulife, Sun Life, and other financial products that can replace certain banking services because they specialize in that particular product. And then international banks like JP Morgan, they chase cater to global banking needs, therefore providing a better substitute to some global customers. Then talking about digital cross-border like Pesa, they provide foreign exchange services at quite cheaper rate than the traditional banks. So these are all the substitutes that a customer can think of when they are thinking about RBC. The next part of the presentation will be taken over by Hemant.
Thank you so much, Newman. Hello, everyone. Myself, Hemant Kumar Singhal, and I will be talking about the analysis of RBC industry competitors. Royal Bank of Canada, with its operational context, reveal a shared competitive landscape, which is shaped by various forces in the Canadian financial environment. RBC faces moderate suppliers' power in terms of technology and employment, which involves strong supplier relationship and investment in technological advancement. To stay competitive at intervals, rapid fintech innovations and digital transformation pressures. However, customer bargaining power in Canadian banking industry is moderate due to enhanced information availability and low switching cost, empowering customer to compare and demand better terms from banks like RBC. Despite this, RBC maintain customer loyalty through strong branding and a diverse product portfolio. Whereas the threat of new entrants into Canadian banking sector is low due to strict government regulation and bit real capital and submissions measure which act as a barrier to entry. However, the threat of substitutes, particularly from fintech firm offering innovative financial solution, poses a significant challenges. These alternatives are increasingly competitive and sometimes more efficient than traditional banking systems, which compiling RBC to continuously innovative and adaptive. In summary, RBC negativates a dynamic market environment marked by moderate suppliers and customer influence, low new entrance threat due to strict regulation and a significant challenges from fintech substitutes. This demand ongoing strategic adaptation to maintain rival and relevance in Canadian financial service landscapes. That's all from my side, and I'll request to Gyani to take the rest of the part. Thank you so much.
So thank you, Hemant. And threat of new entrants will be discussed under three major factors. First one is barriers to entry. And as you all know, Canadian banking industry is highly regulated, which is nationally controlled, which reflecting the new entrants have high barriers to entry and capital requirement for the banking industry is also high. Major part of the capital requirement will be fulfilled from the customer deposits. As RBC is having higher customer base, they could easily fulfill this requirement. But for the new entrants, it is bit difficult at their initial phase. And response from the existing firms also should be considered because RBC and some other major banks are dominating the market and their response toward the new entrant should be considered and by looking all of these factors it's showing barriers to entry is high and reflecting threat of new entrants to RBC is low and economies of scale and RBC is experiencing economies of scales under distribution channels as well as digital literacy and distribution channels RBC is having more than 1200 bank branches within the Canada and they have a lot of ATMs machines established which incurred a lot of cost but this could not done by the new entrants at the beginning and the digital literacy as RBC have implemented technology into their business operation which has reduced number of employees and overall in the long term there is a cost saving but implementing technology into the business operation is also high costly and new entrants could not bear this at the initial phase. This is also reflecting RBC's having low threat from new entrants and the market trends reflecting brand loyalty which reflect RBC's having more than 150 years legacy along with 97,000 customer base and this could not be beat by the new entrants and customer switching cost is low because almost all banks are providing same product and service and new entrants could not make difference with the RBC and market power of RBC is high as market is dominated by few major banks. They are having larger customer base and almost having more than 90% of market power and they are reflecting oligopoly market and they are the price setters and new entrant could not beat that as well. So overall threat of new entrants to RBC is low. So let's move to the managerial recommendations based on the overall analysis. Here are the managerial recommendations to RBC management to provide solutions for the existing as well as potential issues identified. Upgrade RBC mobile banking app, introducing loyalty programs, expand product portfolio, marketing through brand differentiation, collaborate with fintech companies, conducting awareness programs, take action towards cybersecurity, connecting with suppliers, employee training and development programs, adhering to the government rules, and market research. So, yes, we're done with our presentation. Thank you.